Hello dear friends, today is Friday, December 20. Let's look at the charts for the euro and the pound sterling and try to make some predictions. As we can see, after rallying during the European session amid a light macroeconomic calendar, the euro resumed losses as expected. It was weighed down by a stronger US dollar, driven by the Fed's interest rate decision and its plans for further monetary policy moves. Yesterday's US GDP growth data was revised upward. The US economy grew at a 3.1% annualized pace in the third quarter, higher than 2.8% in the second estimate. This boosted demand for the greenback, leading to losses for the euro and British pound. US initial jobless claims data was also positive, with the number beating market expectations. This added to the confidence of dollar buyers. Speaking of the pound sterling, the Bank of England's decision to leave interest rates unchanged triggered a sharp sell-off in the market, although the pound had rallied by 100 pips in the first half of the day. The British currency came under pressure from increased uncertainty after Bank of England Governor Andrew Bailey's speech. He said that the path of monetary policy would likely be downward given market bets putting another interest rate cut. Bailey added that the regulator would be cautious but gave no specific information on future rate moves. As a result, the pound experienced about 180 pips of intraday volatility, a rarity these days. Now let's take a look at today's macroeconomic calendar. It includes data on UK retail sales for November. If the indicator comes in higher than analyst forecast of a 0.5% increase, it will signal continued inflationary pressures and put further pressure on the British pound. Traders may also take notice of German producer prices and the Eurozone consumer confidence data. However, these reports are unlikely to have a strong impact on market sentiment. The focus of traders will be on US statistics, including the core PCE price index, which is the Federal Reserve's preferred gauge to measure inflation. The index is estimated to have risen by 0.2% in November, after advancing by 0.3% in October. On an annual basis, core inflation is forecast to have increased by 2.9% after gaining 2.8% in the previous month. The US is also set to release data on personal income and spending. A rise in these figures could contribute to further gains for the greenback, with the euro and the British pound extending their losses. From a technical perspective, the market situation for the euro-dollar pair has barely changed since yesterday. A false breakout at 1.0351 coupled with the MACD divergence will generate a buy signal, allowing the euro to rise to 0.385 and close the weekend in a sideways range. If the price breaks through and consolidates above 0.385, the European currency is likely to rise to 0.421 and probably 0.454. At this level, I recommend going short on the rebound to catch an intraday correction of 30-35 pips. Short positions at 0.421 and 0.385 can only be considered on a false breakout. Alternatively, if the price breaks below 0.351, weighed down by strong US inflation data, the euro-dollar pair is expected to dive to 0.308 and even 0.257. At this mark, it would be wise to go long on a rebound in anticipation of the 30-35 pip move. Going long at 0.308 and 0.351 will only be relevant in the event of a false breakout. As for the British pound, it is suffering losses. A false breakout at 24.96 will generate a strong sell signal, dragging sterling down to the weekly low of 24.64. If the price breaks through and fixes below this level, the pound will likely stand weakness to 24.24 and possibly 23.83. At this mark, traders are advised to go long on a rebound, expecting a 35-40 pip move. Long positions at 24.64 and 24.24 can only be opened at a false breakout. In a bull case scenario, if the price consolidates above 24.96, the British currency will have a chance to recover to 25.28 and even 25.60. At this level, I recommend going short on the rebound, counting on a 25-30 pip decline. Going short at 25.28 and 24.96 will only be relevant on the false breakout. Good luck to all. Have a nice weekend.